Hello there. Welcome back to Financial Accounting and 4. In this video, we are still looking at Module 1, and we are looking at forms of ownership according to this video, or forms of ownership or types of businesses. So you would see that we are going to look at various types of businesses that we have. That is, for example, we're going to look at sole trader, we're going to look at partnership, close cooperation, as businesses that within the context of our syllabus. So you'd see that these are types of businesses or forms of businesses. They are defined on the basis of the first point that we have is on the basis of the way in which a business is controlled. So in terms of the owners of the business, so we are saying the owners of a sole trader or the sole owner is different from the owners of a partnership. And then if you go, the second point is also on the basis of how the capital is accumulated. How do they raise the capital? For example, a company raises the capital by issuing shares, whereby the sole trader, we are talking about the money that has been invested by the owner. It describes the capital. As well as the partnership, we are saying resources contributed by the partners represent the capital. So also on the basis of who takes the risks. In terms of risk, we've got some types of business or forms of businesses. We have um, the owners are taking all the risks in terms of unlimited liability, and where we have also in some forms of businesses, there is limited liability. So from that point of view, then we go to the last one, which is on the basis of how profits and losses are shared. We know that a sole trader or a sole owner takes all the profits, whereas a partnership, they share the profits. Whereas when it's a company now, we are saying they're only given a proportion of the profits that is paid in the form of dividends. So basically, that is the company. So the shareholders, as owners of the company, are given proportions of the profits in the form of dividend. So typically, that's what we have other companies. So we are going to start to look at sole owner as the first form of businesses. Is we can call it a sole owner. We can also call it a sole proprietorship. So it is a type of business owned and run by one person. So we are seeing that the description that we have there, the textbook description says one person owns this type of business, and it is usually also managed by the owner, but he or she may also appoint the manager. So this is what we have, and it goes on and says that the owner provides all the capital and receives all the profit, but also take the risk of any losses that may occur. So that is also a disadvantage of a sole trader, because the sole owner has to take all the risks that are there in that business, because he or she is the only owner that is there in the business. So the interest of the owner in the business is called the owner's equity. So the owner's equity, we are saying, is the interest of the owner in the business. So, but basically, at the end of it, we can be able to evaluate in terms of the sole proprietorship or the sole owner as a business. Evaluating, we are looking at advantages and disadvantages that can be associated with a sole owner. So you see that when you look at the advantages, it is easy to establish. Because we have got only one person who is operating, and there are no procedures in terms of legal procedures in terms of registering the business. So it is an informal business. So basically, it is easy to establish. So also the owner has full control of the business as compared to partnership, whereby the control is shared between the partnership. And then we go to another advantage that we can talk about. There are no corporate income taxes. So we see that uh, the sole proprietorship as a business does not pay income taxes because it's not yet a registered business. So, and also we see that it has also simple dissolution processes. The processes of dissolution, we are saying if the businesses want to stop operating, there are no processes that have to be followed that are time consuming or costly as compared to a company. So this is what we have in terms of advantages, but we can also deduce some disadvantages that are there in terms of running a sole proprietor as a business. We've got unlimited personal liability. We are saying if the business has got some liabilities, the business is owing external parties money, the owner has the full responsibility to pay those liabilities, and the personal assets of the owner can be taken to pay those liabilities. So it becomes unlimited liability that exists in a sole proprietorship as a business, which is a disadvantage. So we go on and look at the second form of business that we have, which is a partnership. So a partnership, basically, it is an arrangement between two or more people to oversee business operations and share profits or losses. So that is the basic description of a partnership. According to our textbook description, it's saying in a partnership, at least two and at most 20 persons are called the partners on the business. So that is the textbook definition that we're having. The big advantage of such a business is that more capital can be accumulated as more owners invest capital in business. So basically, this is what we have. But we see that at the end of it, these are partners as owners of the business. They have to share the profits at the end of each financial period. If there are losses that are there, they also share. Remember, by running a business, we can either make a profit or we make a loss. So at the end of it, again, we can be able to evaluate in terms of owning a partnership. And first look at advantages, and we are saying also, remember, a partnership is not yet registered again, so there are less formal and fewer legal obligations that are involved in a partnership. It is also easy to get started. And you see that there is an issue of sharing the burden. If there's any burden that is there, or any trouble that is being initiated by the partnership as a business, it is shared between partners. So it becomes an advantage. And then in terms of, we're seeing that we have got a combination of different people that are going to be operating that partnership. So obviously, from different partners, we are going to access more knowledge, more skills. We combine the skills from each and every partner, more experiences, the experience that each and every partner is going to contribute positively to the operations of the business. It becomes an advantage. So also better decision making, since we have got many people that are there, we are going to have more input that is going to lead to more a better decision making processes. So even when the partnership is starting again, more capital, since capital is going to be contributed from different people. So the total capital will be more as compared to a sole proprietorship. But also disadvantages that we can also deduce that there is no continuity. No continuity from the sense that if one of the partners die, the partnership will cease to operate. That is no continuity. So that is there is no independent legal status that exists in a partnership. It negatively affects the business if there is the death of one of the partners. Then also there's unlimited liability. That is that the personal assets of the owners that are the owners being the partners can be taken to pay the liabilities of the business. So also a point that we can take note. So there's also a potential for differences and conflicts. For example, we are saying we have got more people that are owners of the business. So if there are differences that are going to emanate from that, from different viewpoints, it can be also a disadvantage of the business, whereby we have got differences that are going to be there. Conflicts, obviously, they will act negatively to the operations of the business. So again, slower and more difficult decision making. Remember, there's no decision that can be made without the consent of all the partners. So it means that we have to consult all the partners that are involved so that a decision can be reached, which is time consuming. So it's a disadvantage. Then moving on, you are going to see that we now have a close cooperation. So close cooperation, this is a type of a venture where the shareholders, directors and officers are typically the same. So it is owned by a small group of shareholders and is not publicly traded. So the small group of shareholders that own a close cooperation range from 1 to 10. So we can also deduce advantages and disadvantages from a close cooperation, whereby we're saying advantages. We see that it's not a very big business, so the small size of the company makes it easier to manage and pass decisions as compared to a company. It also offers more flexibility in the company's operations, and at the end of it is more affordable to set up than as compared to a company, because it's not as big as a company. So we also have disadvantages that we have. that we can deduce that it is impossible to list it on the stock exchange. Remember, we are saying we have got some shareholders that can be there in in a close corporation ranging from 1 to 10, but it's impossible to list it on the stock exchange. So it becomes a disadvantage. Remember how the issuing of shares is also a way of raising capital at a business. So also the absence, there's no annual meetings that are conducted. And so the absence of annual meetings and filing of accounts can lead to difficulties in maintaining the company's performance. So it acts negatively since there are no annual meetings that are taken. So this is what we have in terms of our close cooperation. So moving on, we have got the issue of a new term that is coming in, limited liability. I think we have defined what exactly is limited liability. Limited liability, we are saying the personal assets of the owners of the company cannot be seized or taken to compensate for any debt that has been initiated by the business. So this is limited liability. It becomes an advantage from the point of view of the owners of the business. So this is what we've got types of business activities whereby we see that we can have various business activities ranging from service businesses, trading businesses, manufacturing businesses, and so on. So the service businesses is a business that sells a service, and we've got examples of services that are mentioned here. We have got hairdressers, we've got dry cleaners, electricians, attorneys, doctors, etc. They are service providers. So it is a service, a business. So you go on and look at the trading business that engages in buying and selling of goods in order to make a profit. So they buy the products and then they sell it by adding a markup on top so that they can make a profit. So we've got the retail outlets as examples of trading businesses. We go to manufacturing. Manufacturing converts raw materials into final products. That is a manufacturing. There's production which takes place in the manufacturing businesses. Examples of manufacturing businesses are factories where goods are made. It's a manufacturing business. Then we've got a non-profit organization. This is not a business. Remember, the main objective is a profit motive under a business. But in a non-profit organization, there is no profit making. So we cannot call it a business. It's an organization. So not-for-profit organization, some businesses are not established to make a profit, but rather to provide a service to certain groups of communities. These businesses include, we've got examples of clubs, societies, they are non-profit organizations. So all the profit made by such an organization, we do not call it profit that is made under non-profit organization. It's excess of income over expenditure. Is usually appropriated to improve the facilities for the members. So this is what we have in terms of not-for-profit organization. So there are no owners as such in terms of non-profit organization. Again, we have members. They are the ones that run the organization. So basically, this is what we have according to this video, and hopefully this video was helpful. And please, let's not forget to subscribe and share. Let's meet again in the next video as we move with the financial accounting and for textbook.